Welcome back to another episode of Gimme Some Truth. There's times that we talk about evergreen subjects, stuff that kind of doesn't go out of style, and there's other times that we talk about stuff that's very much kind of cutting edge and up to the minute, and that's where we're at today.
We're in the world trendsetters.
We're trendsetters. We're in the world of recently passed legislation, depending on when you're watching this. We'll say passed within the last few weeks. I think that's fair. The Genius Act, and how it applies to, I think, kind of the everyday investor, right? I think we get these legislative pieces and then it's okay, this is a thing, but then how does it apply to me? Mm-hmm. Right. And I think that's what we're here to talk about today. Particularly stablecoins. You really can't go 5 steps in any direction without hearing something about the world of crypto. And so, Clint, help us understand how the Genius Act, I guess, just helps to define a little bit better, that world in general, right? I think is it fair to say this is the biggest piece of legislation that Congress has passed in regard to crypto?
I think, yes, this is the definitive piece of legislation. There's likely to be 2 pieces of legislation. And really what we haven't had in the past is a lot of certainty around regulation. And it appeared the SEC was taking kind of an odd stance on crypto, and there were a lot of companies that chose to remain offshore to provide crypto assets and custody. And so there's some issues there because there's no real regulatory framework built in that was backed by legislation. And so the Genius Act here was meant to kind of codify some of those, the background and the regulations around crypto and specifically around stablecoins. So as I indicated, I think there's 2 pieces of legislation here. One is more for, crypto in general, which I think is coming later. And this was a very rare piece of legislation because it was bipartisan. There were some Democrats that joined on, a few Republicans that didn't. There was a little infighting that happened, and then the legislation went from it's certain to pass to it maybe won't pass, and then now it got signed into law. So it's been kind of a roller coaster ride, and we've seen that now it seems that we're going to get some regulatory backdrop to it, and we're going to see the adoption of these stable coins that are going to be fairly ubiquitous in a short amount of time.
Yeah, I think that's the piece that's the most exciting, at least the way we see the world is it was real before, but now it's real and kind of stamped, if you will, by the government in that way.
That's right. And you think about the background around this, why would the U.S. be incented to put legislation forward and to push stable coins to the forefront? And the main reason is that it wants to remain as the provider of the world's largest fiat currency. And so a lot of these stable coins, we want them, as the government, we want them to be backed by U.S. treasuries, U.S. assets. So we want to make sure that everything kind of stays with us. And that's why you're seeing this push in this legislation. And that's why I think it happened pretty quickly too, is that we all want the reserve currency in the U.S. to be the U.S. dollar. And these stable coins will help actually reinforce that.
So let's take a step back and just and define stablecoin just in general, and maybe compare contrast to how that relates to cryptocurrency, because I think there's some confusion around what's the category, what's the actual thing, right, if you will. How does this thing compared to this thing, right? So help kind of connect some of those dots for people that maybe haven't kept as close a watch on this as you have.
Mm-hmm. So stablecoins are cryptocurrencies, and just like their name, they're meant to have a stable value, unlike other cryptocurrencies, and we'll get into more of that in the future. But with stablecoins, they're meant to be pegged to something. So in this case, they're meant to be pegged to the U.S. dollar, and they're meant to be backed 1-to-1 to fiat. So, one stable coin equals $1 U.S. dollar, just kind of as an example. So basically what we're going to do is it has to be backed by reserves. And in some cases, they had some issues with the previous stable coins in that they were supposed to be backed by reserves, but the reserves were volatile in value. And this legislation really says, hey, you only can have certain things that can qualify to be a USD-backed sort of stablecoin. So right now we have, cash, T-bills, equivalents, that sort of thing, short-term paper that's related to the US dollar. So, in many cases, it's going to end up being treasuries that are going to be pegged to these securities. And then it has to have a one-to-one, and it has to be audited. So you have a situation where you have to make sure that, when regulators come in, that stablecoin, $1 stablecoin that you have is backed by $1. So there's going to be some audits done on that. And that is hopefully how they kind of shore up the regulatory framework and give confidence to investors that it actually exists in that form.
And I think can be negotiated then, right? I mean, it can be used, right? And I think that where some of the confusion comes in with Bitcoin, I mean, it's just checking kind of as we sit in real time at Bitcoin at, I mean, it's just 115,000. That doesn't mean anything to anybody, right? I mean, because they try to think about that and they go, that's not $1. That's not $10. That's in dollars. But yet, how would I use one Bitcoin if it's valued at 115,000? You know what I mean? Like it feels very opaque, I think, for people. And like, how would I use this unless the thing I wanted to buy was, $115,000? How do I buy a $6 cup of coffee with Bitcoin? I think that's where people lose that connect, right?
That's right. And it's very difficult to negotiate Bitcoin as a payment method.
Sure.
Because it takes time, and there's oftentimes these gas taxes that come into play here. Stablecoins are not that. It is going to directly compete with your swiping. You could be able to pay with stablecoins through the use of wallets, similar to your wallet using a credit card, but now those interchange fees are going to be a lot lower. So the stablecoin is really going to be transformational in that these payment networks and systems to send these stablecoins back and forth are a fraction of the cost of, say, a credit card merchant interchange situation. So it has a huge benefit for retailers to be able to not have to charge and pass on some of those fees to the customers. Because if you think about it, this credit card interchange is just a tax in the system. And businesses pay that, and people pay that as the businesses pass it on to the end consumer. So if we can limit those through the use of stablecoins, that'll be a huge economic benefit to society as a whole. Now, somebody like a MasterCard or Visa might have another take on that, and they're obviously trying to work out and figure out how they're going to use stablecoins as well. So you've got PayPal and MasterCard and Visa that are all involved in this. And so it's going to be a big sea change there. The other place where stablecoins have a huge benefit in is sending payments to somebody else. So when we talk about, hey, I have a relative and I might want to send money back to Mexico. Well, how would you do that? You might go to a Western Union and you may have to plop the money down. It might take multiple days in order to really send this payment to somebody else. And so this is a way that you could easily send money from wallet to wallet quickly with very nominal fees to be able to do that. So these stable coins will be hugely beneficial in that. And then banks will be able to mint their own stable coins as well to have the adoption of these be, okay, I'm JP Morgan, and they've been one of the main players here talking about minting their own stable coins. Having a USD-backed JP Morgan stable coin could allow them to send cross-border payments easier, would allow them to lend easier as well. So it kind of removes some of the underwriting aspects of some of these items or limit the amount of fees that it would take to have a loan or send payments. And so I think it's really going to be transformational going forward. And the adoption needs to be probably faster than people realize.
Yeah, I think that to me is the biggest difference, because when you think about Bitcoin, and we'll just use that as kind of the juxtaposition, right, to what we're talking about. Bitcoin, in my estimation, almost feels more like gold in a way, right? Where everybody just decides that as of this day or this time, this day, it's worth this amount of money, right? It's not really pegged to anything. It's just, we've all agreed apparently that it's worth $115,000, right? Just like we agree that gold is worth, $3,200 on any given day, whatever day. This feels much more practical in its usage. And not only that, is it feels like it found an opportunity within the market. We've all just agreed to pay 3% on a credit card transactions, which when you say that out loud, it seems crazy, but we all just apparently agree to do that. This seems like they found a specific place to go in and disrupt an industry and make it better for the end user.
Yeah, absolutely. And I do think also for the cross-border payments, fantastic. I mean,
Right.
the wire fees and currency transactions on cross-border payments, the risk that you take in those are fairly high as far as there's a large tax, and then you have a lot of currency conversion in there. If we're dealing mostly in stablecoins, your vendor may not even ever convert that to their own fiat currency in, say, France. It may not end up being a situation where they need to do that. They could just leave it in US dollar denominated stablecoins and not have to convert it over, and they could transact business in that. And I do think the payment processors will make their own. So perhaps like Stripe makes their own stablecoin, which is highly likely. And then they'll be able to transact in those. And maybe they'll have to limit some of those to, a fraction of that sort of interchange fee as well, or maybe no interchange fee if you're using their own coins. So it's a great opportunity, I think, long term, to end up disrupting industries in a massive way. So yeah. I'm really excited about this legislation. And I also agree with you, Nate. Cryptocurrency, then as we kind of zoom out, we look at, okay, what about Ether? What about Bitcoin? Those are different. We're not using those as much as payment vendors. They're not used as a currency, which is weird. You might as well just take the currency off of it and just call it crypto, just because I think that Bitcoin is extremely volatile and it is a store of value sort of situation. It is limited, okay, kind of like gold. So Right. It is kind of the new gold, and I think it's an apt way to put it, that Bitcoin is kind of an alternative to gold in today's day and age.
Yeah, I think you could if we take the liberty, you could literally just say crypto asset class, right? I mean, it's its own asset class right now. That's how we look at it in portfolios. We look at it as an investment option. We look at it as something where people can add it to a portfolio with a measured amount and kind of play the ebbs and flow that push Bitcoin in a similar way that they play the ebbs and flows that push the value of gold up or down, right? Mm-hmm. Neither really is, as of today, I don't want to sort of change it, neither as of today has a kind of ingrained practical use within society, right? It might, in time, we might figure out a way, and you could say gold has some practical use, but for the most part, it's just a thing where you kind of put into a portfolio and we watch the value move. That's not stablecoin.
Correct.
And I think that's the big difference.
Yeah, I think it's used as an alternative to fiat currencies.
Yeah.
So Bitcoin exists pretty much because people may or may not have confidence in their own fiat currency. So, for example, we know that we're going to have deficits until the cows come home here in the U.S. And if we believe that the dollar is going to go through a long-term cycle of decline, perhaps Bitcoin is an asset I might want to have to keep a store of value. Now, whether or not that ends up happening remains to be seen because it's so volatile and it seems to flow in a way that isn't necessarily represented. I think gold is closer to that. Mm-hmm. Both are kind of react in different ways when we have kind of a fear index. It seems like people run to gold when there's fear. I don't know if you have the same thing with Bitcoin. So I think it's an interesting look at an asset class that may belong in a portfolio. As a case study, I don't think we've ever had people ask about cryptocurrency more than we have in the last 12 months.
Right.
So.
Right. And I would say that, both gold and Bitcoin, if we stay on that topic for just a second longer, both very volatile, relatively speaking, right?
Yes.
From an asset class standpoint. I think that's where people confuse sometimes. They think gold, kind of shiny bar, stable. They think it's a protector, if you will. But I think they confuse that with then being low volatile, which actually is not right. Gold has a higher volatility than does the S&P 500, and Bitcoin absolutely. So I think in those ways, more volatile assets to add to a portfolio. So obviously would need to be done in a thoughtful way.
Yeah, and I think as far as portfolio construction goes, you can add more volatile assets to a portfolio and actually reduce the overall risk. but it depends on the correlation of those assets. So, for example, if you added Bitcoin and gold, very volatile, to an overall portfolio of stocks and bonds, and we remove some of the, say, small cap exposure and mid cap exposure, it may have a rate of return profile. It may give you a better rate of return at a lower risk point. It may not. I mean, it all depends on how you constitute everything. So, it's worth looking into in your own allocation and worth considering, should I buy some of the cryptocurrencies and put in our portfolio? Now, the main thing is we have limitations in how to access them. You can go out into cryptocurrency custodians that are kind of more specific to that. So the Coinbases of the world, we could probably go into there and buy some in there. But there's been some issues from some exchanges that have gone out of business, Voyager being one of them in the past. And there is no SIPC insurance for cryptocurrency places. So you may want to access them through the use of an ETF. The downside of that is that there's only basically like Bitcoin and Ether ETFs right now. Sure. All of the other coins that you have in there, you may not have access to in an easy fashion. Yeah. So there are a bunch of them that are listed with the SEC and waiting, but these things move at a pretty slow pace. I'm hopeful that the second piece of legislation, if it occurs, will allow more ETFs of these cryptocurrencies to enter the fray a little bit faster so that we can actually have a better, more ubiquitous adoption in these cryptocurrencies.
Well, just easier to use, easier for people to get their arms around. They don't have to be experts in at that point. They can say, I like this asset class, but I don't necessarily, want to get deep into the weeds of how to own it individually. Let me just buy the basket ETF, add it to my portfolio as an alt and call it a day.
Exactly. Because if you think about the way that you should do it, I mean, if you're really being careful and you don't want to worry about custody fees and things like that, you should buy it and then you should put it into cold storage. Well, if you put it into cold storage, you've got codes to deal with things like that. Right. A fire could wipe out everything. I always remember the story of the guy that had a hard drive and he had his Bitcoin basically was on the hard drive and the hard drive ended up in a landfill.
Yeah.
And I think it's worth like hundreds of millions of dollars right now, and he can't get it out of the landfill. He's already tried to find it, and he can't. And so there's some big problems with some of these cryptocurrencies in that, they can get stolen, and when it's gone, it's gone. There is no investor protection based around it. And if you want to really be safe, sometimes being really safe is being really risky.
You're right.
Where somebody can just throw it out, or you have a weird event and all of a sudden all your money is gone, or somebody isn't aware of it.
Right.
So if I had a bunch of money in cold storage and I pass away and my wife doesn't know about it, how is anybody going to redeem it?
Right.
So having it on exchanges in ETF format would allow it to be a lot more accessible as an investment option.
Well, and I think that's a good place to wrap it up. I think the Genius Act, in our opinion, is a great first step forward, and we'll just loosely say first step forward because it's the most definitive to this point of defining kind of what and how and why. But I think we look forward to future legislation. And I think we look forward to future clarification on the subject, as well as investment options and ways to be able to build it into a portfolio. And ultimately, that's our job for clients, is to be abreast of the situation when it comes to these kind of newer style of investments. I mean, you and I were doing this long enough to know when ETFs were new. And so, these things, just because they're new doesn't make them bad, doesn't make them, scary. It just might mean that we have to kind of get comfortable with it. And so I think the investment world is kind of getting its way to the point where they can deliver it in a package that's much more easily digestible for clients. So we thank you so much for your time today. If you have comments, please put those in the comment section below. We'd love to hear from you. Otherwise, we'll see you on another episode of Gimme Some Truth.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.